Tech is on a hot streak, as we have discussed frequently. The Nasdaq Composite hitting intraday highs after notching a perfect week in Friday's session, 5 straight record closes, while tech giant Apple maintains its weekly streak of gains as well. We're looking at how to navigate the big picture with the Yahoo Finance playbook, and Doug Clinton, managing partner at Deepwater Asset Management, is joining us now to discuss. Doug, it's good to see you. We continue to see these sort of mega cap tech giants continuing to climb here. I know that you watch them closely, but you also watch a lot of the sort of ones that maybe we don't talk about every day. So just big picture here, are you feeling like things are getting overstretched, or do you feel like there is a lot more upside?
We do still feel that there's more upside. And the bottom line for us, Julie, is we still think we're in the relatively early innings of this AI-driven bull market. It may feel like we're late in the cycle here, and we actually just did a survey, 1,300 people on X. Almost 90% of respondents either said they think we're already in a bubble that's about to keep going or crash, or that we're not in a bubble yet and we're going to get one. And so the bottom line is it feels like the market is really attuned to the realities of AI right now. And our view is that it is still early. The way to position yourself for it, though, is I think where you can kind of add alpha and prepare your portfolio properly. What we like to do at Deepwater is invest in both the public and private markets. On the public side, we really like the hardware space. It's been the outperforming space, the best performing space of the year. We still think there's a lot of room to go in terms of AI infrastructure spend that's still to come. On the private side, that's where we're getting our AI software exposure, because that's where the pure play AI companies like a Databricks, like a Hugging Face, and like XAI, which we just recently invested in at Deepwater, that's where you can find those types of investments.
And hey, Doug, you know, in the public markets, some of these AI hardware names, Doug, you know, Arista, it's had such a, you know, that's had a strong run already. Doug, would you be adding there, or maybe waiting for a pullback at this point?
We do own Arista, Josh. We still like Arista, and it actually had a great week last week. On top of those Broadcom earnings, Broadcom talked about strong networking demands, and they actually upped their networking revenue guidance on the reality that there is strong demand for Ethernet-based products in AI data centers. Arista has built their portfolio around Ethernet, and so I think they stand to be a good beneficiary of that trend that we're seeing from Broadcom.
And also, you know, what strikes me as I looked at your various picks, whether you're talking about Arista or some of the memory chip makers like an SK Hynix, like a Micron, is that, for lack of a better word, they're sort of the less sexy areas. That, in other words, they haven't gotten as much attention, right, during this whole situation. Does that mean, whereas, I mean, the stocks have still done well, but do you think that they maybe are more attractively valued than some of those that are getting more attention?
I think some are, and I think what's even beyond that is if you think about kind of what's been priced in so far, you look at a stock like Nvidia, obviously they've had incredible earnings growth that has supported how that stock has moved. I think companies like an Arista, Vertiv is another name that we like that does liquid cooling solutions. You know, I think those are stocks that actually still have upside to numbers. And that's really what we're trying to find as we look beyond the big cap names like the Nvidias, like the Broadcoms. We want to see that there's still potential that hasn't been fully recognized yet by the market. And I think that makes these stocks actually probably cheaper than they might appear if you just look at the numbers.
And Doug, you know, I haven't had the chance to talk to you since Apple's big software show. I'm curious to get your take, Doug, because the narrative there heading into the show, I mean, at least in some quarters, was, well, you know, Apple's fallen behind in this AI race. And Tim Cook obviously tried to take the stage and really kind of change that narrative, change that story. Doug, do you think he did it?
There's two sides to it, Josh. It's hard because if you're an AI nerd like me, you probably weren't blown away. We didn't see anything from Apple, if you're really closely following the AI space, that we haven't really seen before from Google, from OpenAI. And so I wasn't blown away. But what I think is important, more important, is that the average Apple customer, the person who doesn't care about ChatGPT, maybe doesn't even use it on any regular basis, I think they probably saw some features, for example, a Siri that might actually just work for once. I think that that is a big deal for the average Apple customer. When you think about customers that need to upgrade and really drive device growth, where we haven't seen that device growth from Apple for the last kind of 18 months or so. I think those are the customers that matter. And I think Apple probably did enough with AI to excite them to come and get a new iPhone over the next year or two with these AI features.
So were you one of the folks buying Apple shares sort of the day after the beginning of the presentation as we saw the stock surge to a new record?
I couldn't speak to kind of recent trading activity for us, but what I would tell you is this: on the large cap side, for this whole year, really, Google and Meta have been our two favored names. And the reason is because they both are leaders in the AI generative model space. I think there's only 4 companies really that have a chance at creating artificial general intelligence and sort of winning the AI race. It's OpenAI, it's Google, it's Meta, and it's XAI, Elon's company that, as I mentioned, Deepwater did actually invest in that one as well. We think that's a good space to deploy capital to.
Well, and I think that's a really interesting point, because a lot of people don't necessarily have access to, you talk about that on the software side in AI, a lot of the exciting stuff is happening with still private companies. So what can people who maybe don't have access to those raises, how can they get access? Or, as you brought up earlier, is it better to sort of play on the vendors maybe to those companies?
I think that's the easy answer. Is you want to probably look back to some of those hardware companies and maybe wait until some of these AI companies come public. Or if you do have access, if you have a vendor that you can work with to get access to private markets, that might be something worth exploring too. But I think the easiest path is, and I do think the window is open right now for a lot of these AI companies, is probably to wait for them to come public. And I do expect we'll see some of that happening over the next 6 to 12 months.
Doug, always great having you on the show. Thanks for coming on, my friend.
Thanks, Josh. Thanks, Julie.